Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is the 8th of June. All right, let's begin with economic data being released today. We have the NFIB Small Business Survey. That should be interesting considering the fact that small businesses and large businesses alike, for that matter, are now competing against the federal government for competing wages for employees. The government wants them to stay home, and the government and employers can't find good help. So, shocking to find out that as a small business owner that my new competition for employees is, in fact, the U.S. government. Not much else coming out today. We do have job openings. Forget about the trade deficit. That's just going to continue to balloon. Years and years ago, when I first started trading, that was a very important number. But now nobody even talks about it. Scary. All right, let's get to the pre-market futures. Then we're going to talk about a few chart requests, plby, LEDS, and St. Joe. Lee, good morning. Ramon, good morning to you. All right, let's go to the futures action. All right, I want to kick things off first with the U.S. dollar. And the dollar has been very, very stubborn of late. Down yesterday. This is a daily chart. Trying to hold support here. Trying to put in higher lows. RSI. Higher lows. And you saw a weakness yesterday on the gold miners while the U.S. dollar was down and gold was up. Same thing held true for the silver miners while silver was up. So it's really no great shock to see the dollar, which is up this morning. It kind of explains a little bit of the price action we saw yesterday. So I don't know how good of a week this is going to be for the mining stocks. I think they're going to take a break. Hey, Franklin, good morning to you. Lee, yeah, thanks. Like the video for the YouTube algos, please. Thank you. 10-year yield. Well, I should say the Treasury note. I always do that. The 10-year is up. Excuse me, the 10-year. Yeah, 10 years up. And that means the yields are flat to down. So we should see strength in technology today, strength in the Qs, perhaps a bit of weakness in the banks, energy. Speaking of energy, we know that there's a huge correlation between energy stocks and oil. Oil is down by just shy of a half percentage point. So that makes sense. Taking a look at Bitcoin. Last night, after the bell, it was announced that some of the ransom, if not all the ransom money, which is denominated in crypto, I'm not sure whether it was Bitcoin, Ethereum, whatever, was recaptured from the hackers. And that sold crypto off. The argument was that the DOJ was dumping crypto, and that's only $5 million. So I don't think that's really the case. I think it's the fact that DOJ was able to recapture that crypto, and the veneer of Bitcoin and cryptocurrencies got a little bit weaker, got a little bit thinner, because DOJ was able to recapture those funds. So we're seeing a sell-off here. I don't think it's a great shock. We started a sell-off several weeks ago. I even did a video on Bitcoin, and my price target for Bitcoin was 28.8, and we're now at 32.8. So I'm going to stand by that price target for now anyway. Gold. Down on the session, dollar up. We had a good day yesterday, outside reversal bar or bullish key reversal bar. Again, the miners did not follow through. That was a signal that all was not well in that space. And today we're seeing a little bit of weakness, down over a quarter percentage point on gold. But the path of least resistance remains higher, and seasonality remains favorable through August for gold. Taking a look at equities. RL, good morning, sir. Russell 2000. We broke out yesterday again, but this time it looks like they're trying to put in a follow-through rally on the Russell. Now, we do still have a short position here. And the only reason why I say that is I've been saying that while the shares have been weak or trading sideways. We also want to say it when they're trading up, because people listen and you want to take note of when you're starting to break out, because you need to be honest and say, you know what, maybe the path of least resistance in the short term remains to the upside, and a tactical retreat is necessary, because longer term, looking at a monthly chart, the Russell 2000 is still ridiculously overbought, but that doesn't mean we can't press up higher. But I don't want to fight the market, so we may have to take some defensive measures. More to come here. It's not going to happen early today, but we may need to take some of that short position off the table. So, members, more to come. S&P 500. Inverted head and shoulder setup. Left shoulder, head, right shoulder, and here is your neckline. Now, yields could still head lower, and S&P 500 move up higher because of megatech. So watch the cues. We're going to go to the cues of the NASDAQ 100 in a moment. So we have broken out above the neckline. It appears as though the path of least resistance remains higher for the S&P 500. To the NASDAQ, yeah, another inverted head and shoulders setup. Left shoulder, head, right shoulder. You want to use a 45-degree neckline, that's fine. And we're above it. Not a ton of economic data this week to send these markets lower. So the lack of economic data generally allows for a bias to the upside because there's no catalyst to sell. Despite the valuations of the market. Why did I turn that red? I want green. So equities look as though they're probably going to head up higher. Quick look at ag. The pullback seems to be resolving itself. We're threatening a new breakout here on corn. Lumber prices, of with Kathy Wood believes the rally is over. Maybe she's right, but I'm not seeing a huge ton of sign of it, at least on a short-term basis. Copper prices. They're consolidating here. But they're probably not going to move up higher until you get the next leg up on yields. Larry Summers, the former Fed Secretary, that's the Fed Secretary, Treasury Secretary, came out a couple of days ago saying that he expects 3% on the 10-year by the end of the year. Larry Kudlow was being interviewed, and he says he was asked, what would that mean for equities? And he wouldn't really answer the question. I can tell you what's going to happen to equities if the 10-year goes to 3%. You're going to see Armageddon. So Larry won't answer the question. I'll be more than happy to, because history has proven that to be the case. Natural gas, of which we are long, up today, looking good. And if you're wondering why we're long of natural gas, it has nothing to do with the 4-hour chart. It has everything to do with the longer term, weekly, monthly charts. We have broken out. This is a weekly chart here. Natural gas looking very strong. A reminder, we have on Thursday, nat gas inventories. That's a weekly report. So just beware of that report because it can move natural gas as it did last week. All right, let's take some chart requests. I need to go to members first. I've been told there's issues with signing up lately on the website. I'm having it looked into with a list of other things. PLBY group, weekly chart, nice week thus far. Strong weekly breakout. And we are trading at current. Will we close there? Not quite sure, but trading at current above 50.56 per share, which is resistance. If we happen to retest that support level, that becomes a really good support level at which to buy. Folks, I'm using TrendSpider, 35% discount code below if you're interested. Automated technical analysis. We'll keep this active for 5 days. Touch, bounce. Now, what I do want to point out here is that if you're looking for an upside target, I'm going to take off the automated trend lines, throw them back on. There's your resistance level up here in green. So really good risk reward. After a tight consolidation, lots of upside, minimal downside. So PLBY looking strong. LEDS. You know, this is one of those stocks where the market owns it, the street owns it. It's in play. Can't chase it. Bearish key reversal bar on a weekly time frame. I don't know if we have monthly resistance above. Let's check that out before we leave the weekly chart. A lot of support below, but no resistance above on a monthly time frame. But on a weekly time frame, you do have a lot of resistance up here in the mid-40s. That's a good distance away. Daily chart. You know, another bearish reversal bar on a daily time frame. So I can't touch this stock. Very extended relative to the third standard deviation Bollinger Band in red. I think it's going to pull back in. If we're looking for support levels, 1812 on a real severe pullback, 1276. And you may be saying he's absolutely nuts. There's no way we're going back down to 1276. Remember, equities take the escalator up and the elevator down. So it could certainly, on an intra-period basis, even on an intraday, intra-week period, could certainly retest these support levels. 2101 is another support level to watch. I would avoid this. I wouldn't short it, but I certainly wouldn't buy it here. St. Joe. This is a land company out of Florida. Very familiar with it. Monthly chart. Great consolidation here. We're beginning to break out above 48.21. Weekly chart. Again, that 48.21 mark. We are above it after a strong consolidation. Daily chart. Daily time frame. Again, another breakout here. If you're looking for a pullback, watch, where do we close here? We closed at 48.46, support at 48.19. So any pullback could be bought here. In fact, frankly, any continuation move could be bought here. It looks pretty strong. And taking a look at seasonality, this only goes back 5 years. There's more data than this, I'm sure of that. Let's go back to 2009. All right, seasonality. This is a very seasonally favorable period of time for St. Joe. June is up 69% of the time. July, 67, 64 in August. Very favorable period of time. I like to trade. It looks as though it's probably going up higher. PLBY is down 6 points. And on news, RL? Oh, they did. Takes a page from AMC's playbook. Did they issue shares? It's selling stock after. All right, so they issued shares. Me, typically, I avoid, at least in the short term, stocks that have issued shares. This may be a buying opportunity for all I know, but these binary events, I tend to avoid because you're buying on spec. Too bad. All right. Will CPI drive markets down? It depends. If it comes in hot, you're going to see the knee-jerk reaction. Traders are they're going to have to adjust these algorithms because typically when you see CPI hot, they buy the dollar. Why they do that is just beyond me. They buy the dollar, they dump gold. It's just the exact opposite of what they should be doing. They should be buying gold and dumping the dollar because your buying power, the U.S. dollar, is being diluted every single day. So I for the life of me, I don't understand that logic. And of late, it's been a very, very temporary event where you get hot inflationary data, whether it be the PCE or the CPI. You get hot economic inflationary data. They buy dollars, dump gold, and then the next day they reverse it. So they're starting to pick up on it. If inflation comes in hot, you may see the transports, energy, and banks do well because yields should move up higher. What else we got? Hey, John. Good evening to you, pal. All right, we'll leave it off with WKHS. Yields are pulling back. I've been pretty bearish for a couple of months now on these high beta stocks. But with yields under pressure, it leaves open the opportunity for them to rally back, which they've been doing. Now, Workhorse here, at least on a weekly time frame, I'm not loving it. You know, we have broken out a bit here. We have a lot of resistance above, though. So I can't buy into these resistance levels. You know, you look what they did late last week. They gapped it up into resistance, faded it. I'm not loving it. I know it's a volatile stock. It can make me look very, very foolish very quickly by being gapped up. The ideal place for me to buy this stock is right down here. Let them correct it, fill the gap. Because if we buy right here, right into this resistance level, you know, we're using hope as a strategy. And as I always like to say, hope is not a strategy. So I want to be a little bit more tactical and allow for a pullback and a filling of the gap. It doesn't have to be exactly on the dime of 1158, you know, give or take a dime. But I prefer to wait for a pullback, and then I could set a tight stop or at least a mental stop below. Good volume yesterday, but you saw selling into the close. So I'm not in love with the stock. You're welcome, Lee. Okay, folks. Everybody have a profitable trading day. If you can smash that like button, follow, subscribe, I should say, I'd appreciate it. And be well.